YOLO. In today's video, we're going to be looking at 5 different stocks and how much you would need to invest in each one to earn roughly $1,000 a month in dividends, as well as a bonus hypothetical 20-year investment time frame to see just how much power compound interest has. But before we get started, I just got to say I'm not a financial advisor or fiduciary, so do your own due diligence. This is for entertainment and educational purposes only. We'll be ranking them from number 5 to number 1, starting from most expensive initial investment down to the least expensive. But without any further ado, because I don't, let's get into it. Starting off with number 5, ticker symbol UNP, Union Pacific. This is one of my favorite stocks for long-term growth and investment. It's an incredibly safe and reliable stock. I've sung its praises in a couple of my other videos already. That's how much I love this one stock. The railroads aren't going anywhere anytime soon, and they move so much freight. It's an incredible business. It helped build America. It is phenomenal. However, that share price of $231.41 is a little hefty, especially when you factor in that they only pay quarterly dividends, which means we would need to earn $3,000 a quarter in dividends to roughly equate to $1,000 a month. So, their current dividend is $1.34 per share. To earn $3,000 a quarter, you would need 2,238 shares. At their current price, that would be $518,082 as an initial investment. Now, I don't know about you, but I don't happen to have $500,000 just lying around that I could invest in one lump sum for this. So it's incredibly expensive. But it's also a very safe and reliable stock, so the lack of risk also lowers the reward. It kind of makes sense. But the next stocks on our list have much lower initial buy-in prices. Now moving on to number 4, ticker symbol KO, the Coca-Cola Company. I just recently did a video on Coca-Cola versus Pepsi. You should go check it out. But in that video, I looked at more of the additional products each of these companies sell and just how big of a conglomerate they are, a duopoly. Now, Coca-Cola themselves have a lower share price of $70.33. And they pay 51 cents per share paid out quarterly in dividends. So to earn roughly $1,000 a month in dividends, you'd have to get $3,000 a quarter, which would come out to about 5,882 shares needed. At the current share price, you would need an initial investment of $413,705 in Coca-Cola to earn roughly $1,000 a month in dividends. That's better than Union Pacific. We were able to keep the initial investment under $500,000, but still, $400,000 is quite a lot. Let's see how much lower we can get it with the next couple. Now moving on to number 3, ticker symbol XOM, ExxonMobil. Let's face it, oil's not going anywhere anytime soon. Even with all the people swapping to electric cars, our fighter jets, our spaceships, our tanks all require oil. Even frisbees are made out of an oil derivative, plastic. So oil is not going anywhere anytime soon. And its price has taken a bit of a hit. Currently, its share price is about $109.38. And they pay a 99-cent dividend quarterly. So to earn $1,000 a month, which would be roughly $3,000 a quarter, you would need 3,030 shares. At their current share price, that would be an initial investment of $331,454. Moving on to number 2, ticker symbol PEP, Pepsi. We had Coke earlier, now we have Pepsi. Their share price is much higher than Coca-Cola's, which I touch on in my other video. But they're currently at $131.04, and they pay one of the higher dividends we've seen today at $1.42 per share paid out quarterly. So to get that $1,000 a month, or roughly $3,000 a quarter, you would need 2,112 shares. At their current share price, that would be an initial investment of only $276,845. Much more favorable than Coca-Cola, and definitely a lot better on the wallet than Union Pacific, but still a little too high, so they don't make it into the number one spot. Speaking of the number one spot, we've got number one as ticker symbol MO, Altria. Most well known for their cigarettes, although they have branched out into other things, alcohol and that green business. They have a share price of $58.75 and a hefty dividend at $1.02. So to earn the $1,000 a month or the $3,000 a quarter, you would be looking at about 2,941 shares of Altria. At their current share price, that would be an initial investment of $172,794. The lowest initial investment out of any of them so far, because it is the number one spot for a reason. But it may not be the number one spot for total returns. Now let's go ahead and look at a hypothetical 20-year investment into each of them, assuming you bought enough shares to get paid $1,000 a month in dividends and then reinvested those dividends over the past 20 years. Here's what you would have earned. Pepsi would actually be doing the worst after 20 years with dividends reinvested, as it would only be $553,000 total. Next would be Altria, sitting at $1,100,000 after 20 years with dividends reinvested. After them comes Coca-Cola, surprisingly, better long-term returns than Pepsi, at $1,113,000. Then we have ExxonMobil at $1,312,000. And finally, in first place for the hypothetical 20-year investment, we have Union Pacific at $2,304,000. The company that was one of the worst when it was in terms of initial investment, through the power of compound interest over time, became an absolute juggernaut. The power of compound interest plus reinvesting dividends is phenomenal for astronomical growth. And it's one of the secrets to Warren Buffett's success. He started investing when I believe he was 10 or 12, and he's been investing ever since. He's had 80 to 90 years worth of compounding for his money to grow. And he made most of his money after the age of, I believe it was 60 or 80, just because that's how compound interest works. You do all the work up front, that way the later half gets all the rewards. But I'm curious, do you own any of these stocks in your own portfolio? And if so, which one's your favorite? Let me know in the comments below. I personally own all 5 in my portfolio, and for me, favorite is a very close tie between Union Pacific and Altria. Union Pacific for the safety and growth, and then Altria for the incredibly high dividend and low share price, making it easier to accumulate a larger position. One honorable mention stock that didn't make it into the video, but nevertheless is still one of my favorites, is Waste Management. It's similar to Coca-Cola and Pepsi in that it's a duopoly with Republic Services for just taking out the trash. But I was planning on having it in the video, but I wanted to get the Pepsi Coca-Cola combo, so I decided to push it off, and I'll do another video on it at a different time. And if you don't want to miss that, make sure you subscribe and hit the post notification bell. That way you get updated when new videos drop. Thank you for watching, and I hope whatever you invest in pays massive dividends. I'd love to see you at the top. I think there's room for everybody up there. Most people just don't make it because the journey is difficult. But, as always, I'll catch you on the flip side.